as fear grips the globe. 4 reasons why gold is skyrocketing. Hello, this is Chart GPT today. I'm going to talk a little bit about gold and what's driving the prices, and I think the single word is fear. First off, take a look at, a lot of people think gold is an inflation hedge, and to a certain degree it is. Here's a kind of a chart, the CPI versus the gold fixing there. And you can see a little bit of correlation, but very often when inflation is high, it doesn't necessarily react in the same way. So there is a correlation there, but it is not that tight as some people think. And of course, gold has been being purchased by central banks in a steady basis since 2010. Central banks maybe know something we don't, possibly. You know, people look at gold prices versus the stock market, and gold by far parallels between the price of stocks and gold. Stocks is far better inflation hedge. So if you're thinking about inflation hedge, stocks by far over the 100-year chart here outpaces gold by a long shot. What people do is look at the correlation. One of the correlations that people do look at is gold versus the 10-year real rate, and it correlates pretty tightly in terms of its day-to-day movements. And you can see that this divergence is happening here. So all of a sudden, I mean, we had inflation earlier and it didn't seem to make a difference here. But now all of a sudden, is it just a late bloomer here, or is there something going on that we don't see? And I think my hypothesis is that gold is not necessarily a huge inflation hedge. It is a fear gauge. And I think that's what's happening, is that a lot of people are fearing what's coming over the next, say, 6 to 12 months, and people are buying gold in preparation for that. So I'll give you the 4 reasons, I think, and I think probably you can guess a few of these, but let's take a look at it. Here's kind of a shocking statement from Anthony Blinken, and he says basically Ukraine will join NATO. Well, that's almost a declaration of war against Russia. Russia will not stand for that, whether you agree with them or not agree with what they've done in Ukraine. The point is, they will not allow that to happen, and it will go nuclear if that should ever happen. So that is a real fear, and people know that in the markets. Believe the markets, don't necessarily believe all the politicians. Second thing is the security alert. Of course, this has been going on since October 7th when the Hamas attacked Israel. But the point is that Israel is getting very aggressive in their campaign against the Arab nations around them, and they're attacking the Iranians. And of course now Iran will have to respond, and of course this is going to escalate even further. Then there was the killing of the aid workers. So this is just spinning out of control. So the geopolitics is two areas. Those are 2 hot areas. And we haven't even talked about China. China's probably not quite as fearful, but nevertheless, these are the 2 main reasons that people think that these could mushroom into a regionally, even the 2 wars could even combine to a certain degree. Third thing we have here is the presidential elections coming up. Remember the famous book from Bob Woodward, Fear, and a president that is more or less a puppet. And it's not necessarily criticism of Biden per se, but obviously even some of his supporters are questioning whether or not he's capable of being president. And so this is what's going on into the U.S. presidential election, and it could be a disaster. And number 4, a lot of people don't realize this, but this is what's happening in the financial markets. The debt is out of control, and the amount of money that we're paying for interest is ballooning. 1.6 trillion in terms of the budgetary out of a 6.9 trillion budget, and it could escalate if interest rates go even higher. And they could. Fed may or may not cut it, and that's if they don't cut. If they raise rates, which a lot of people think they may have to, inflation comes back. I mean, we could be paying all our budget in interest payments, which isn't going to happen. So we're reaching that Minsky moment. We had an article on that. I put the post link in our reference links on this particular post so you can see that. So that's what it's all about. Looking at gold specifically here, here's a kind of a chart, a trader's chart. We've been in a long wedge since, let's call it 2020, 2018, before COVID. It's been winding up, and it's now exploded through, and it broke it. And of course, if you look at your trader, you look at the width of the wedge, it should bring the price up to about 3,000. So a third of the move is already there, but it's another, could go higher, and it could explode even higher if the fear factor comes in. You can sometimes see 6, 7, 8 times. So we could see gold up in 4,000 or 5,000 in a momentary spike. Or if things calm down, we could maybe hit that high on the wedge and then bounce back into a longer term trend. You can see those red trend lines are growing in steepness. That's indicating a parabolic bubble that is bursting to the upside. Anyway, we asked the AI, and I said, what are the top 4 factors you see? And it was less than interesting, but you might want to read what the AI says. It shows you the AIs aren't that smart sometimes. And take our online poll. Will gold prices continue to skyrocket, or will the recent rise is merely temporary in nature? Interesting times we live in. We'll have to watch this gold price. It's a measure of fear, not necessarily inflation. Now don't forget to subscribe.